SBI will be putting out its Q1FY21 numbers tomorrow. Stock seems to be taking it on the chin today ahead of earnings, so perhaps there's something not too positive being priced in. But based on what the brokers have to say, the numbers look quite decent on various fronts. NII growth should hold up, 24,500 versus last year's 22,939 or last quarter's 22,767. So both on a YoY and sequential basis, we're going to see some decent growth, 7-8%. Operating profits is where there's going to be a bit of a hit, 15,400 crore versus last quarter's 18,465. So nearly a 3,000 crore drop sequentially. And but YoY versus last year's 13,246, it's a good 10-12% increase. So YoY not a problem on the operating profit level, but sequentially a drag. At the PAT level, you're going to see some divergence over here among brokers because there was a stake sale from SBI Life, and that was around 1,500 crore. So if you take that into account, brokers think the PAT could come anywhere between around 3,000 to 5,000 crore, but the average estimate comes to around 4,000 crore versus last year's 2,312 or last quarter's 3,851. Now this will also be, mind you, on the back of higher provisions. Banks have been taking huge provisions. ICICI Bank took 5,500 COVID provision. HDFC Axis total provisions were around 4,000 crore apiece. Even Kotak, for its smaller loan book, took significantly high provision. So even for SBI, which is the largest, the provision figure should be enhanced to a certain degree. But despite all of that, the PAT still looks like it will come at around 4,000 crore. Now, other factors to look out for are the loan growth, which is expected to come in the 7 to 8% range. One more thing which is very important about SBI, being the leading PSU, they are always the first to transmit rates. So what's been happening is since March, when the FM and the RBI have been meeting, the repo rate has been gradually brought down, also the reverse repo rate. So banks have been expected to drop their MCLR rate and their deposit rates in tandem with those movements. And SBI has been on the forefront of that. For all their other shortcomings, on the transmission front, they are very prompt to act. And because the MCLR and the subsequent deposit rate has taken so many changes in the last couple months, there's going to be divergence on the NIM front. And brokerage estimates for the NIM as a result of this are ranging from 2.75% to 3.1% because they're not sure exactly which way it will go. So that's a key monitorable for this quarter. Like we also said, 1,500 crore stake sale gain from SBI Life. That's another key one to look out for. And then obviously commentary on the MSME and the retail books, which are large, as well as agri slippages and overall provision coverage will also be important in this quarter.